Hi everyone, it's Alex here at Sestrin Capital Research. Welcome to our weekly webinar for our Seeking Alpha at Substack subscribers. It's currently Thursday, the 28th of March, 4:15 Eastern for the benefit of the tape. Okay, well, today I've got two topics. We'll look at the US equity indices as always, look at the S&P, the NASDAQ, the Dow, and the Russell. And I want to then step through some enterprise software stocks. So Abby suggested this in Seeking Alpha chat today. Thanks, Abby. Good idea. All the news, as everyone knows, has been about semiconductor for the last 2 or 3 months. And some of these software stocks have drifted sideways, or sold off a little bit. Charts on lots of these looking, at least to my eye, quite bullish actually. So I'd like to step through some of those. So what we'll do is look at Cloudflare, that's net, Snowflake, ticker Snow, Zscaler, ZS, CrowdStrike, CRWD, Datadog, DOG, Dynatrace, DT, and MongoDB, that's MDB, and talk about those. Q&A as always. So what we'll do is run through the equity indices, pause for questions at that point, and then move on to the single stock names, and discussion will take its natural course as always. If you'd like to ask a question, make a point, everyone welcome as always. So you can do that in a number of ways. Either open your mic when mics are turned on after the equity index session and shout into the system, or you can use the Seeking Alpha chat room if you're a Seeking Alpha member, and I can read the question out there for everybody else's benefit, or you can use the question or the comment function here in the webinar platform. But do speak up if you have a point to make, a comment, a question, anything at all. Do speak up. The best thing to do is ask right now. I guarantee if you have a question or a comment, it'll be a high quality one, and it'll be a question or a comment that everybody else wants to hear the answer to. Okay, so before we do any of that, let's do our usual disclaimer, which is on your screen right now. So disclaimer, this webinar is intended for US recipients only, and in particular is not directed at nor intended to be relied upon by any UK recipients. Any information or analysis in the webinar is not an offer to sell or the solicitation of an offer to buy any securities. Nothing in the webinar is intended to be investment advice, and nor should it be relied upon to make investment decisions. Sestrin Capital Research, its employees, agents, or affiliates, including the presenter of this webinar or related persons, may have a position in any stocks, securities, or financial instruments referenced in the webinar. Any opinions, analyses, or probabilities expressed in the webinar are those of the presenter as of the webinar's date of transmission and are subject to change without notice. Companies referenced in the webinar or their employees or affiliates may be customers of Sestrin Capital Research. Sestrin Capital Research values both its independence and transparency and does not believe this presents a material potential conflict of interest or impacts the content of its research or publications. Okay, so without further ado, let's switch and start to take a look at those equity indices. Let's get this on your screen right now. Let's focus on the short term. You've heard many times me walk through the base and the bull case argument, and it's getting to decision time. The NASDAQ is smack bang in the middle of the potential base case termination zone. We see it there. I'm not going to go into detail about this. We talked about it a lot. The S&P base case termination zone is a little bit overhead, not far away. And so if indeed we are in the late stages of a bull market, as almost every talking head will have you believe, then we'll know it, because the S&P is going to sell off and the NASDAQ is going to sell off, and that's all going to happen quite soon. I don't think that's my expectation. My expectation is that we have some way to run. I believe that the market will be higher at year end than it is right now. And my expectation is that it continues to climb from now until year end. Obviously not unbroken, obviously not without sell-offs here and there, but the dominant trend, I believe, will continue to be up for the major equity indices. Let's just look short term right now. So here's the S&P. This is the ES futures chart. Now look, there's a really important level that I personally am very focused on. That's 52.75 or thereabouts. That's right here in the middle of this purple circle. Let's zoom right in on this. Okay. Right here. And the reason I'm focused on that is because this was a key technical level, 52.74. And it's key technical level because it's the 3.618 Fibonacci extension of the wave one up that started in January 23. I'm sorry. So this is basically the bull market that's existed from the 14th of March last year for over a year now. I mean, just a sell-off between July and October last year, but basically a straight up bull market for a year. This is the bull market that everyone's denied, by the way. That everyone says it's going to dump and sell off, and it's not real, and inflation and blah, and it just hasn't. It's just kept going. So if anyone has been short, has been sat in cash, then all they've done is cost themselves actual money or opportunity cost. We have a bull market right in front of us, and it's not open to interpretation. That's just what it is. The question is it going to continue? Now, that 52.74 level on the ES futures or the SPX index would be a similar number. If that turns into support, then there's a good chance that the S&P can keep moving up for another, couple hundred points probably before it does sell off at all. But if that level fails, then probably we're heading for a wave 4 sell-off, and we could see that retest that 4,800 2020 all-time high. If it does, by the way, expect to see absolutely everybody all over the news, all over Twitter saying, I told you so, it's a dump, it's all going to zero, blah, 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 blah. But I don't think that'll happen. Even if we get a sell-off here, it's just a sell-off. It might retest that 21 all-time high, which would be just a way to scare the civilians. But if it does, if it even drops a bit below, then I think it will keep moving up. So my best guess is we continue to be in a bull market, but don't be surprised to see scary moves designed to get people to part with their money. And in particular, don't be surprised to see everyone all over the TV, all over social media telling you about how it's all about to come to an end. NASDAQ, here we go. This is the move up that started again January 2023, pretty much unbroken move up. Yes, again, a slight sell-off between July 23 and October 23, but not really much of one. NASDAQ's up about 9-10% on the quarter in Q1. That follows a blistering 2023. It's continued into 24. I personally was a little bit cautious in January and February about whether the market could keep moving up. I've become more bullish as the quarter has gone on. And again, NASDAQ in recent days, this is a daily chart, has just gone a bit sideways, a bit down. So we'll see whether we get a short-term sell-off or not. Again, if we get a short-term sell-off, the level I would be looking to is around 1675, which is that 2021 all-time high. Because if you're a big account player and you wanted to scare everybody silly, all these people that have denied the bull and just joined the bull market late, what would you do? You'd dump the market right below the 2021 all-time high and scare everyone into parting with the money. That's what you would do. So let's assume that's a real possibility. The Dow's only up right now. I think the Dow can keep running. If you don't get these charts, by the way, take a look at our website, sessioncapitalresearch.com, and sign up for the market analysis newsletter. It's not expensive, and on there you can get these charts every day. You get the long-term, short-term, sector ETFs, all of that every single day. So again, sessioncapitalresearch.com, choose the market analysis option. It's $30 a month, $300 a year. It's not expensive, and you get these every day. Russell, again, a really, really nice 5-wave move up from the October lows. A wave 1 up into November 23, a 2 down into later November 23, a 3 up, 4 down, and we're in a 5 up now. This might terminate soon, so you might see the Russell hit 2200, 2267, something like that, and then sell off. Again, if it does, expect to see people declare, the end of capitalism as we know it. But in truth, most likely, if we look at the IWM as a Russell measure, we look at the weekly, just zoom out a bit, then I flagged for some time this 200 level as being really important on IWM. That's here, and it's broken through that quite nicely. It's retested 200 support on, let me see, 1, 2, 3 different weeks so far. This week it took off, and we'll see if that keeps going. TNA, another good test. This is the 3 times levered Russell. So I've been saying that a close over 42 would be bullish. So this is the daily chart here. Close today 42.94, open the day 42.73. So we'll see. But if this can hover above 42 and stay there, that's here. TNA over 42, bullish for the Russell. Okay, so that's indices. Why don't we stop and take some questions and comments before we move on? So let's just switch everyone's mic on. Everyone's mic is on now. So any questions, points, comments? Now's a great time before we move on to the single stock stuff. So anyone have anything to discuss right now? If not, then we'll move on to enterprise software, which it looks like we do. Okay, righty-ho. So enterprise software. Now, again, obviously all the action has been in semiconductor for the last few weeks and months. Everyone's got all excited about NVIDIA and others. And enterprise software has sold off some. So time to check in on a few of these names. So let's start off with Cloudflare. And if you're a Growth Investor Pro subscriber, you should have seen a whole lot of chart updates coming your way today. So first of all, let's look at the weekly chart. This is Cloudflare. We had this at accumulate between let me see, $36 a share and 64. It's currently around 96, 97. Now, just take a look at this pattern, which you'll see in a lot of the stocks we're about to talk through. This is a consolidation pattern. So we have rising support here, and we have declining resistance here. Now, those wedge patterns, what that means is that price is going to break one way or the other. And that's a pretty unhelpful place to be, if you ask me. And you'll see this pattern, you'll see time and again in the stocks we're about to go through. Some people are very good at trading these wedges. I must admit, I am not. I find it guesswork. I know that the stock is going to break one way or the other because the price range that the stock has been in is compressing. But you have to look elsewhere, I think, to see evidence of, well, which way is it going to break. One place you can look is the options market. So Jay Abane, who runs the Jay's Options service that we host, he does some great work on this to look at, well, where is the balance of calls and put buying? Where's the balance of dealer hedging? And so you need a different lens to look at this. If you're going to trade this short term, if you're going to say, well, I believe that this stock is going to break to the upside or the downside, my own personal view is it's not really enough to look at just the common stock. You have to consider what's going on below the waterline that you can't see on the stock chart. And usually options market's a good place to look at that. My own opinion, for what it's worth, is that these stocks are going to break to the upside. Why do I think that? Because I think the market is going up. And I think that a little bit of air has come out of these software names in recent weeks. You can see that that's a weekly chart you're looking at here. So for the last 1, 2, 3, 4, 5, 6, 7 weeks, Cloudflare has been in a downtrend, and the market continues to move up. Fundamentals in Cloudflare are perfectly good. Nothing to fear in the fundamentals. And so I suspect this is going to resolve to the upside. I'm long Cloudflare. I don't have a huge position, but I'm long the stock. My guess is resolve to the upside. If we look at a shorter term chart on Cloudflare, here's how it looks. This is a daily chart. Charts quite well to technicals. So this is the move that starts January 2023. We get a wave one up that moves from 37 a share to just shy of 73. A really, really deep wave two retracement down to almost gives up the whole move down to $40. And then a wave three up that gets to above the 200% extension, puts in this big gap up on earnings. So gaps up on the 7th to the 8th of February. The day before earnings, it closes at 90, and the day after earnings, it closes at 108, having been as high as 115. It leaves a big gap there. Now this gap gets closed, so 15th of March, so more than a month later, that gap there is closed. So the gap that starts at $90 gets closed there on the 15th of March. And since then, it's moved up a little bit. My guess is, if I had to guess, I would guess, but it is a guess, that there is the wave 4 low. The reason that I've pinned the wave 4 in the chart to this 50% retrace is because it's more cautious to do so. Because what can happen with these sell downs, as I say often, is you can really get horribly caught out with these ABC corrections. I hate these. So the big question is, is that an ABC like that? And all we've had so far is the A leg. We've had some B leg, and we're going to get another C leg sell off. Or, was that the A, that the B, that the C, and now we're moving up. And of course, you don't know until after it's happened. So all you can do is either take a longer term view and not stress too much about the daily movements, or be really alive to the fact that, if it moves up now, you can't really relax until it's really cleared that prior high. B waves don't often clear the top of that trade point 0 there, but sometimes they do. So you have to be really careful with these things. They can really, really catch you out. It's really easy to get very bullish and have these stocks dump again into a C wave sell-off. So I remain medium, long-term bullish on Cloudflare. Just be a little bit careful, going all guns blazing bullish at the moment, because it's not obvious to me that we've definitely gone through an ABC correction yet. And wave 4s typically are ABC corrections. So that's my take on Cloudflare, which is to say generally bullish, but I'd be a little bit cautious short term. Question: does this? I presume this is on Cloudflare. Does the short term Elliott wave and fib level indicate a further pullback? Yeah, but I mean that's the way I've drawn it. So I've drawn it to be more cautious. It's better to do that, I think, than go, well, that's definitely the end of the wave 4, and now it's to the moon. Better to say, well, look, this chart is still valid. It's still a bullish chart, even if that wave 4 sells down to that wave 1 high of around 73. So even if Cloudflare dumped from 97 to 73, then this chart, this 5-wave chart that starts back in January 23, would still be a bullish looking chart, and we could still see the wave 5 terminate up here somewhere. So I tend to draw these wave 4s quite cautiously. That doesn't mean I definitely think the stock's going to dump to that level. But again, looking at where an ABC might take us, it's quite possible that that's an A, that's a B, and that's a C. And so I can definitely convince myself that we're going to get a 50% retrace here of this wave 3 up. And so I think in posting charts, it doesn't make any sense to say, oh, well, the wave 4 is definitely finished. Oh, look, it sold off some more, I better drag it down. I think it's more prudent to show a chart as to, well, where could it reasonably sell off to and still be in a bullish pattern? I would say that medium term, I think that Cloudflare is in a bullish pattern. If you look at our medium term chart, we've got a price target, well above the prior all-time highs. And so how to reconcile that in the short term is, well, this is a pointing up chart, but very short term, could it sell off some more? Sure, it could. And so you have to be prepared for that. So yes, the Elliott wave and Fibonacci level chart shows a possible further pullback. But again, but that's just how I've chosen to represent the chart, just to take account of possible risk. Okay, let's move on and let's look at another one of these. Let's look at Snowflake. So let's look at some fundamentals on Snowflake. Snowflake, I know it's the world's most hyped business. I personally have never much cared for it under the previous management team. I thought it was all hype, to be honest, and not as good as the reality suggested. I personally think that's starting to change. So if we look at what's happening with revenue growth, it's still slowing, but the rate of slowing has really slowed. So revenue growth was up in the 100% range at the end of 2021. It got down to 32% by the October 23 quarter, but it dropped only 0.3% into the January quarter. Gross margins are ticking up, 68% now on a TTM basis. EBITDA margins up 7% now, which is an all-time high. Cash flow margins flattened out. They've reached 16%, which isn't wonderful, but it's okay. But they're not getting worse, and they're up considerably from a couple of years ago. I think this business is improving fundamentally, and the CEO change I view as personally a good thing. I think we've got somebody in the room now with a point to prove, high energy, all of that. And so I've gone from being quite skeptical on Snowflake as a business, forget the stock, but as a business quite skeptical, to being more cautiously optimistic. If we look at the chart here, here's the chart. So there's a lot of noise here, but let's ignore all of the hype that happened, post IPO. And let's just look at what's happened from the June low. First of all, look, the stock bottomed out in June 22. The S&P didn't bottom until October, and the Nasdaq not really until December, January. But Snow was amongst the great many stocks that bottomed out earlier in the year. So that's first of all a bullish sign. So from June 22 lows of 110, we get a move up to 205. So it doubles from June into June into August 22. Then we get a big sell-off. That's about, I would say, an 88.6. Just checking on. Yeah, there you go. Perfect 88.6. Retrace wave 2 low into January 23, and then it's volatile, but it's up, right? So it's it is an ebb and flow up. The stock sells off on news of the former CEO stepping down and earnings. The guidance given on earnings wasn't particularly bullish, but it looks to have found support. So it drops from a pre-earnings high of 235 to a post-earnings low of 151. Back into our accumulation zone, which is between 110 and 165. The stock's currently at 161, so we're just about to accumulate on this. But this is trending up. If we zoom in a bit and look shorter term at Snowflake, look, this is the post-earnings sell-off here. And this is a daily chart. You can just see the rate of decline slowing. You can see what you very often see with these sell-offs, shorter and longer term, is you often see this kind of spike down. So you can see it hit a technical level and then spike down. You often see that, which I always think of as a sort of scare people out type spike, before then finding its true support and moving back up again. So to me, the low in Snowflake was the 19th of March, and I think now we're trending up. Now, nothing happens quickly with this stock, as you can see, but I feel pretty cautiously bullish on this. Again, I'm long Snowflake. I don't have a big position, but I think this one can move up now. So we're accumulating for now. If the stock starts moving up, we'll be at markup and hold rating before too much longer. So that's Snowflake. Okay, next one. Let's do Zscaler. So cybersecurity stock. We're very bullish on this, as you know. Revenue growth took a bit of a hit this quarter. They've got some slowness in federal in particular. Probably that's a function of some slow ups in federal budgets, which will unlock over the course of the next 6-12 months. It's not guaranteed, of course, but that's the sort of surround sound. Overall, though, 41% TTM revenue growth, gross margin strong at 78%, all-time high EBITDA margin at 19%. Cash flow margins dropped a bit at 15%, but again, 15% cash flow margins and 41% growth. That's all right. Balance sheet strong, $1.3 billion of net cash and a huge order book. The order book is worth basically twice the last 12 months revenue. And the growth in the order book is around 30%, which is a bit slower than recognized revenue growth. That's a concern, but I'm hopeful that we see that order book growth tick up in the next 2 or 3 quarters as some of this federal budget comes back on stream. The fundamentals continue to look good at Zscaler, in my opinion. Let's look at the stock chart. Fantastic run from the lows. of May 23. It bottomed really, really late. And, you know, it sold off. But, I mean, look, it's still massively up from the lows. So here's the story of the stock. COVID lows, $35 a share. 2021 highs, 377. So a better than 10x move in the course of, you know, 18, 19 months, 20 months. It's pretty incredible. And then it dumps. It drops 78.6 retrace, again, a bit lower. And again, look, here's one of these spike lows, right? So it hits that 78.6 retrace level, which is around $110 for the sake of argument, mostly respects that level. And you can see it, you know, here acting as a support in this green box here. And look, this is a fake out breakdown. This is just to scare everybody and take your money off you and scare you into going, I think I'll sell, it's going to zero. But it's just a fake. And, you know, a big red candle, a dojo candle, an indecision. This is a weekly on week of May the 1st last year, and then rips up from there, just rips up. Hits a local high of 262 during early February, and then it's sold off since then. But again, look at the rate of decline, right? Zoom in here. So we get these big drops here. Not much of a drop the week of February the 12th, a sizable drop February 19th, another sizable drop 26th, another sizable drop week of March the 4th. Last 3 weeks, nothing burger, right? So, you know, it opened at 196 the week of March 11, and it's closed at 192 this week. So a whole lot of shouting for $4. So this looks to me cautiously bullish. Again, I'll make the same point about an ABC correction. So if we just zoom in a bit and look at Zscaler on the daily, there's a bit more evidence that the bottom is in here. Because look, this is the high in early February. You've got your A wave down, and that drops. What's the share price drop? From 260 down to 200, let's call it. So a $60 a share drop-ish on the A wave down. You get a B wave up that almost breaks that high. This is what I mean. These B waves are awful. They can really, really trick you. So it's easy to get very bullish here and go, it's all great, you know, pile in, buy, buy, buy. Oops, trips you up. So watch out for these ABCs. I hate them. And then the C wave, what's the drop here? Again, look, if we're to the bottom of the C wave is there. So 190 down from 250. So this is a perfect A equals C correction. That is a thing of beauty, right? $60 a share drop in the A wave from 260 down to 200. A B wave up recovers almost all of that. And then from 250 down to 190, another $60 a share drop. So that is a technically perfect correction. And that again says to me that I think we're at support and I think we can move up. So I'm pretty bullish on Zscaler. Okay, let's look at CrowdStrike. Let's do some fundamentals. Fundamentals good on CrowdStrike, not nearly as good as the stock is performing, but good. So revenue growth dropped a bit this quarter to 33%, but it's not dropping to the floor now. 36% TTM revenue growth. EBITDA margins all-time high, 25%. Cash flow margins, though, you know, they're down. Peak cash flow margin was around 30% back in 2021. We're now down to 19%. And we've got this strange circumstance whereby EBITDA margins, accounting profit margins are going up, but cash flow margins are flat. And that can mean one of two things. At the best case, it is that the company isn't collecting as much cash upfront. And the worst case is they're being too aggressive in their revenue and profit recognition. So let's assume it's the former. Let's assume the payment profile is changing, becoming more in arrears and less upfront than it used to be. That's the kindest interpretation. Balance sheet strong, $2.8 billion of net cash. And order book, deferred revenue is about 100% of trailing 12-month revenue, and deferred revenue is growing at 30%, which is, you know, not far off the level that recognized revenue is growing in ballpark. So from a forward order perspective, the future looks, you know, all right. Let's look at the chart here. Chart's very, very, very good. Too many worries about CrowdStrike. So here's the longer term chart. This is a weekly chart. This starts at the COVID lows. I mean, it's basically the Z-scaler chart, but more bullish, right? So $35 a share goes to 300, so not quite 10x, but not far off. 78.6 retrace, perfect drop down into the 2022 lows. It bottoms in December, and then only up since then. Really strong move up. It hasn't really had much of a sell-off, and so one is due, obviously. And again, look at this wedge pattern here. Let's zoom in to look at this a bit more clearly. I could believe, to be honest, that CrowdStrike's going to sell off a bit. If it does, I would say it's something of a fake out. But just look at the wedge that's forming here. So here you have the rising support, green line, and here you have declining resistance. Change that to red, like so. And again, that would say to me that the stock is going to resolve one way or the other. Now, probably that will resolve to the upside. I could believe, just zooming out a bit, that CrowdStrike's going to sell off a bit. You know, why? Well, because it hasn't so far. Because Zscaler has. So, you know, they're basically the same sort of business. They sell into the same customer base, doing the same sorts of thing. Why would one sell off and the other not? CrowdStrike's been, you know, relentlessly bullish. So I wouldn't be surprised to see a correction in CrowdStrike, but it's not. If it does do that, it's not one that will particularly concern me. I mean, Zscaler, you know, again, I've just held it. I did lighten up. Actually, I was very heavily overweight on Zscaler, but as disclosed at the time, I did lighten up at around this local high from memory. But I still hold a good allocation of it, and I'm not concerned about, you know, Zscaler long term at all at this point. CrowdStrike, I don't own any, which was a mistake. I read too much into the fundamentals, not enough into the technicals. And I'd sold out. I can't remember exactly when, it's in disclosures, but I'd had a good run up, 50% or so run up in 2023, and took profits. And that was an error. Should have held. Could it sell off in the near future? Yeah, we might get a correction, but again, if it does, it's not one that would spook me longer term. So if your time frame is, you know, months and years, I personally would remain bullish on this. If the market continues as it is, can CrowdStrike hit a 1.618 extension, 525? I don't see any reason why not. Is it going to do it tomorrow? No. Will it do it without a pullback? I'd be very surprised. But can it keep going? Yeah, I think it can. Yeah. Okay, lastly, let's look at MongoDB. This is a database business. This is one that I'm not nearly as bullish on. I don't own the stock. Again, I made some good gains on it in 23, sold out, and I don't regret doing so. The company's product, I think, is probably getting a bit commoditized. I mean, it's getting eaten away by low-cost open source providers at the low end and bundled database offerings from the cloud giants, your Amazons and Googles and whatnot, at the top end. Revenue growth is slowing, 27% this quarter, guiding down to 19, 31% on a TTM basis. You know, the rate of decline is still material. Gross margins good at 75%, EBITDA margins ticking up, cash flow margins ticking up. So nothing terrible about the fundamentals, but just if you read about the product positioning, it's nothing very exciting happening in product. And most people who use the product will tell you it's not desperately differentiated. Stock chart, let's have a look. Yeah. Now, on pure technicals, forget we know anything about the company or the product or anything else. Purely on technicals, you would say that's looking like it's finding support, I think is what you would say. You'd say it hit a local high middle of February, looks a lot like the Zscaler chart, it's sold off. It looks like it might be finding support. Now, the question is, of course, where is it on that ABC correction? Okay, we've seen that Zscaler probably has finished its ABC correction. Has MongoDB? Well, this is what it looks like. And the answer is, yeah, it might have done. So here's the local high, 12th of February, where the stock hits 512. This is probably an A wave down. So it drops to 422. So let's call it a $90 a share drop. You get a modest run up, B wave up to 461. And the C wave bottomed for now at 340. So we get 460 down to 340. So 120 plays 90. So you've got basically a C equals, what's that, 1.3 times A. So that's quite a deep C wave. You can get more. You can get a 1.618 times A, or even occasionally a 2 times A. But for now, that's a pretty deep sell-off C. So again, it wouldn't surprise me if technically MongoDB has found support here. I'm not excited about the stock personally long term. I don't own it. And although technically we rate it at hold for this reason, you know, I struggle to think. I don't own it. I don't plan to buy any, and I don't view selling out as a mistake. Selling out a CrowdStrike too early clearly was a mistake. This one, I can more than live with it. That's MongoDB. Okay, we've got some questions, I think. Let's see. Prasad, you're on.
Hi, Alex.
Hey,
So what are your thoughts on FSLY and TWLO? Like FSLY is
yeah,
gotten such a big sell-off here.
yeah. So I would say that it looks like it maybe is finding support, right? So again, look at the. Just move that down a bit. 1 second. So again, like we just seen with the stocks you just looked at, this is a weekly chart. So big drop earnings week, February the 12th, small drop, February the 19th, a couple of weeks of flat, another drop March 11th, and then last week was up and this week's up. Small movements, but up. So best guess on technicals alone, that looks like it's finding support to me. So my guess is it can trend back up towards this 25 level. Whether it breaks up through 25 on the next attempt, I don't know. You've seen with IWM and other things that these sideways trends can go for a long time. But I think Fastly's going to find support. I might add to my position. I already own too much of it, but I might add down here. Not today, but I might add next week. So if I had to guess, I'd say that's a support. Twilio
Do you have any short-term chart? Can you show a short-term chart for Fastly?
on Fastly. Good question. No, not really. It says the same thing. Basically, there's your 25 high, and I,
So
I don't exactly know what I would call this chart pattern, but you often see it, which is this. Hang on, is there a freehand? I don't know how to do this. Um, I can't do it properly, but you often see this sort of pattern, which is a big drop and then a slowing of the rate of decline into support. So based on nothing other than pattern recognition, I think that's probably finding support. I mean, look at this is a daily chart, right? So that let's call it 1240 or something. That's held pretty nicely for more than a week now. So yeah, I'd say that's probably finding support.
why this product is very similar to Cloudflare, is it? Is this similar? Are they in the same space?
Yeah, well, sort of. I mean, they started out doing the same sort of thing. If your question is why has this sold off, my answer is because somebody wanted it to. I mean, there's no why. I mean, the why is because somebody wanted to dump the stock. What's the answer? Why does any stock ever sell? Answer, because somebody wanted it to sell. That's it. That's the why. You can't find the why in any exogenous external inspection of product or market, or I mean, that stuff just doesn't matter to stock prices, in my opinion. I mean, they're peripherally relevant, but they don't drive stock prices. The why is because somebody wanted it to sell off because either they want to buy more cheaply, or they had a position to realize, or something else, right? That's the why.
Do you
Um,
see a lot of volume? Like, has it sold with a strong volume or it's like thin volume?
why? I mean, it's compared to what, right? Because I mean, it's a small cap stock. You see this big drop here is a lot of volume for Fastly, but I mean, it's not a lot of volume from a big stock. So the, I mean, we talk about this one a lot, Prasad, and the answer is it just sold off, right? Stocks do that sometimes, and I'm annoyed. I'm annoyed because I said this last week, right before the earnings print, there was a bunch of 144s announced, which is internal stock sales. And I didn't have time to read them. I'm pretty sure it's 0.72 selling. And I wish I just caught them and sold right before earnings, but I didn't, and I'm annoyed. And I don't have, my life savings in Fastly, but I've got a bit more than I would like, and I'm annoyed. But it is what it is. It just sold off, and there's nothing we can do about it. So the question is, when a stock does this, what do? Right? You either go, I'm walking away because I'm fed up and I got it wrong, right? Option one, or you go, is it finding support? If it's finding support, what do I do? Do I just sit and wait for it to run up again? Or do I, hold my breath and, hate myself, but buy at the lows? And you just got to make a decision about that. Personally, what I've done with a number of times this has occurred with stocks like this is I've gone overweight at the lows, and bought much more exposure than I wanted, which is not without risk, because if a stock like this dumps, and of course it can dump, these are small companies, then I'm going to get hurt. And so far that's worked out for me, mostly. But what I've always tried to do is, if I've over allocated by buying down here, so if I add to Fastly next week, which I might do, then I'm going to have way more exposure than I want for a small stock like this. And so if that happens, then what I will do is, as the stock rises, I'll take some profits just to reduce some exposure. But we spend, in my opinion, there is no like golden reason as to why Fastly sold off. It just sold off. It just is what it is. And I feel like that way with all stocks. Why did Net sell off after earnings? Answer: because there was a game with options going on. It just is what it is.
I see, I see. So, do you see like a bottom for Fastly? Like, I think that's a good idea in terms of like at least kind of averaging down and like buying at low, right? But just in your chart patterns and stuff, like overall, like looking at it, like how low could you think it can go from here?
Well, I mean, it could. I don't wish to sound facetious, but it could go to zero. I mean, any company can go to zero at any time, and the smaller the company, the more likely it is to go to zero. So the bottom for Fastly or Cloudflare or Zscaler or Snowflake or anything else is zero. Is that likely to happen? Not in my opinion. So all you can ever do is look at probabilities. I mean, for instance, if Fastly broke this wave too low at 1150, well, that's a concern, right? You could then argue, okay, that actually, let's just add this one in. Hang on. You could say, well, if it's sold down to, 9, well, then I did my wave one wrong, and this was a wave one, and blah blah blah. But that's just trying to convince yourself of something that isn't real, in my opinion. The real question here is if it holds over this wave too low around 1160, then that's a righteous wave too low, and we're in a messy wave 3 up here. So over 1160, I think it's okay. If it starts to sell off below there, you got to get really worried. And micro caps, this is a small cap stock. They can hurt you, and the only way to control for those risks is not have too much capital at work in them.
I see, I see. I see. Okay. Okay. Did you see any concerns and fundamentally, like I think the CEO said there's one concerning thing that it seemed like it, where he said the international traffic, like why was the drop in revenue, but improvement in margins? Like he said, like the international traffic shifted to a different region and
Professor,
because of,
can I interrupt? Okay,
yeah.
I never take any notice of that stuff. Who cares? Who cares? How can you infer the potential future stock price from that stuff? If you can work out a method by which you can do that, brilliant. You're a genius, and you deserve to rule the stock market, because I can't. So I never ever ever bother, because design an equation that goes from what the CEO says about international traffic to what the stock price is going to do. I don't believe it can be done. I don't think there is a causative relationship between those two things. The stock price moves, any stock price moves according to demand and supply for the stock. And there are, any number of factors that drive that. But, the strength of influence of what the CEO says about international traffic is as close to zero as you can measure it. So I'm giving you a bit of a hard time here, I know that. But my point is to say, right, that stuff doesn't matter. And in my opinion, if you're that deep in the rabbit hole, on a micro cap stock that dumped. Honestly, it's not analytically sound. It just isn't. The answer is the stock sold off. I wish it hadn't, but it did. I wish I'd sold before earnings, but I didn't. I wish I didn't have to average down because I've already got too much of the thing, but I'm probably going to, and I think it will work out. And if it does, I'll take profits on the way up. And all in all, it's not a very efficient use of my money, but this happens sometimes. That's my take on it.
Got it. Okay.
And I wish it was different, but it isn't. So
Got it.
let's do Twilio. Right, Twilio. Yeah, Twilio, I'm pretty bullish on, to be honest. I'm bullish on it for the very simple reason that they've fired the previous profligate, money-wasting, money-burning, egocentric CEO. They have quite a strange hire, an ex-GE guy in there. But they also have a really fantastic M&A advisor, Catalyst Partners, the best of the best, who really know what they're doing and really know how to help a board create value. And the company is going through all the right moves on the restructuring front. We've talked about the fundamentals a couple of times, and anything can happen. But I believe that the board and the CEO and the company are doing all the right things to create value here. And so for me, this is just a waiting game. So I remain pretty bullish on Twilio. Let's just look at the slightly longer term chart. Hold on. Yeah, it just continues to go sideways since October 22. It's like watching paint dry, this thing. But in the shorter term time frame, that's starting to move, if you ask me. So here's the low, October 22. So actually, I guess you could call that the wave one low, maybe. You could call that the wave one high, maybe. What's that, an 88.6? Yeah. Actually, yeah, maybe that's a good chart. So that's the wave two low. So look at this. Yeah, so that ought to reach 84 at least before a sell-off, and frankly, probably a bit more. So if it was at one point, yeah, I'd say there's a good chance that can get to 84 to, let's call it 94, and maybe 108. That seems a bit bullish right now, but I feel pretty good about Twilio. I don't mind waiting on this one.
Got it. Thank you.
Welcome. Who else, folks? I've got one question here. Hang on. Ron. Yeah. Ron says, yeah, good job explaining Fastly. Yeah, it's annoying, but sometimes stocks sell off, right? And so it just is what it is. It just teaches you that, especially with the smaller stuff, don't put your life savings into these things. They can hurt you. Try and be patient and just be dead-eyed about it. Sometimes stocks sell off and they never come back. Sometimes it happens. So when that happens, personally, I've got, for example, a position in Zoom. We don't cover it, but I've got some money in it, not much. I've averaged it down, I think, once. Doesn't look like it's going to do much. At some point, I'll just take the hit on that, and I'll rotate the money immediately, probably into a triple levered NASDAQ ETF that I think will run up pretty quickly. And I won't think twice about it. It's just a question of, is that capital in a good place right now? If yes, I think it can go up. That's fine. I'll leave it there. If no, and I think it's going to languish and I can think of something better to do with it, I'll put it into that. And you just have to be totally detached, not fall in love with the companies, not get into the weeds about what anybody says. That stuff doesn't matter. You know, what the CEO says on an earnings call, that's not there to help you. That's there to help him keep his job. What an analyst asks on an earning call, not there to help you. That's there to help the analyst look good in front of other analysts and the analyst boss. None of this stuff matters. The only thing that matters is what is the price doing. And if the price is moving in the direction you want, great. If it's going sideways, but you think it's going to move in the direction you want, great. If it's going against you, you need to think about how much tolerance you have for it. And if it's going sideways and doing nothing, again, you need to think about how much patience you have. That's it. Price is everything. Everything else, just an input. And you can't draw lines between, you know, any input and the output. The only thing that matters with stocks is the output, the price. That's it. Okay, that's pretty much all I wanted to cover today. So if there's any other questions, comments, anything at all, Prasad, you on?
Alexia, so can you talk about Dynatrace and
Yeah,
PagerDuty, or Dynatrace and Unity software? Sorry.
yeah. Let's do Dynatrace because Unity, I think, again, is just a waiting game personally. But let's do Dynatrace. Here's Dynatrace. That's quite an interesting one, actually. So again, I think that looks quite bullish personally. You know, the stock put in a low when October 22, and again, it was a perfect beauty of a retrace. Here's the COVID lows, $17 or thereabouts, $80 high. It's a nice run up. 78.6 to the dollar retrace down into the 2022 lows. And, you know, a volatile but a constant march upwards and roughly in this parallel channel here. And it looks like it's found support here. But we've seen this time and again on charts we've just looked at. Again, the question I would ask of Dynatrace here, and I don't know the answer, is watch out for those B waves, right? So here's the short-term chart. This is a really pretty 1, 2, 3, 4, 5 waves up on the short-term chart. Look, here's the 22 lows. It moves from $30 up to $44. It puts in a 78.6, a bit more than that retrace. Probably not quite an 88.6, I don't think. Hang on. Actually, not far enough. Anyway, not far enough. 88.6. We get look at that, a perfect 1.618 wave 3 extension. That's a beaut. A perfect 0.5 wave 4 retrace that touches that wave 1 high. That is just one big old algorithmic trade there. That is just trading completely according to the language of the market. That's beautiful. Wave 5 high. Look at it, smack between the 61.8 and the 78.6 extension of the wave 1 to 3 combined. That's a thing of beauty, that chart. You could chart that, you could teach that in chart school. So because this is trading to institutional rules, and it is to the decimal point, then you have to say to yourself, well, is it likely that I'm not going to get an ABC correction, given how perfect that chart is? This is not an accidental share price progression. This is a 1, 2, 3, 4, 5 wave up. What happens after a 5 wave up move? Answer, an ABC correction. So can you see a B wave in there? I cannot, right? I see only down since that wave 5 high at $61. I cannot see a counter trend up. Doesn't matter how much I zoom in, what time frame I look at, I do not see a B wave. What does that tell me? It tells me that we haven't yet had the B wave. So we've had the A wave, there it is. It moved from 61 to 45. So let's call it a $16 a share drop. I think we're going to get a B wave up, so a counter trend rally, and that could go, you know, back up to 61. It could go above to 63, but nothing until, you know, it's way up here would convince me that this wasn't a B wave next. So I would expect a counter trend rally and then a C wave dump would be my guess. And I would expect that C wave to be about equal to the A wave, and I would expect it to wipe out basically most of that wave 5 up. So I would expect an up now, and then a down, and then we can start a new wave cycle. So that would be my best guess. And if we go back to this chart here, what does that mean? I think we might get a move from, you know, the lower part to the either the center trend of that channel, or maybe even near the top, and then back down again. Another intersection with the the low end of this channel, and then another move up. So that will be my very best guess. And that guess is purely driven technically. It's not driven by anything other than the perfection of this 5-wave move up since the 2022 lows. And that tells me that this is pure institutional pricing, and therefore I would expect to see an ABC next.
So, do you have any idea of like, what is the range for the B top? Like, is it 52 or 55 or
I
60?
hate. No, I don't. I wish I did. I hate B waves, right? Because they are designed to trick you. They are very specifically designed to take your money off you. So, um, no, I don't know. I mean, I personally, I never trade these. They're too hard because how big is the B wave? 52? I don't know. 61? I don't know. 63? Possibly. At 65, you'd say it wasn't a B wave, but by then you've missed it all, right? So I never trade these. I either just ignore them because it's a stock I want to own for a longer time frame than the chart before me, or I don't bother and I wait for a C wave low. They're too hard.
So, so if you own the stock right now, you kind of bought it somewhere between, wave 5 versus A, right? Somewhere in between. What do you suggest? Obviously, if it's at low, we want to wait, right? So the question is like, uh,
Well, the
just
first
take
thing I
it.
suggest is know your time frame. That's the most important thing, right? So, are you investing to hold the stock for a decade, a year, a month, a week? That's the most important thing. That should drive the rest of your decisions. So, I mean, look, I'll answer you my own opinion on Zscaler, for instance. Okay, here's Zscaler. So, my own personal view is that Zscaler can keep climbing, and it's a stock I'm happy to own on the current story for a decade. Right now, something might change. Of course, it could change next week. But for now, I think it's going to keep taking market share from Palo Alto Networks and Fortinet and everybody else in cybersecurity. I think it's going to keep winning federal business, and I think it's an only up stock for some time. So I was overweight because I bought too much back here. And I was overweight the stock, and I trimmed some. I can't remember exactly where. I look on disclosures, but around this local high, and it sold off. I haven't added, and I haven't sold, and I don't plan to, and I don't much care if it keeps dropping or if it goes up. I don't care because my time frame is out here somewhere, a couple of years time probably. So I don't care about this drop, and even if we haven't had a B wave yet in Zscaler and there's one coming, I don't care. I'm not going to do anything. In Dynatrace, I don't own a position in Dynatrace. I have done in the past. I've done quite well with it. I like the company. It's good, solid business. It does a thing that customers have to buy. And since Splunk was sold, there's a good chance you're going to buy it from Dynatrace or from Datadog. There's not that many people left. Probably Dynatrace or Datadog or both are going to get acquired. So I think it's quite a good stock to own long term. I look at this chart and think, well, that's a support. Wouldn't mind buying in here. But then I look at the short-term thing and think, I just don't know if I'm going to buy now and get trounced. And I don't care enough about Dynatrace, and I'm not going to put a big allocation into it. So really, is it going to change my life if it does well? No. Am I going to be annoyed if it drops? Yes. I'm not going to bother. That's my take on it. If I owned Dynatrace already, my question to myself would be, what is my time frame? Am I waiting for the stock to get for the company to get bought, which it could well do? If yes, well, go up by 50% tomorrow. If I'm trading it for a B wave move up, then I'm going to be thinking about a stop, down probably below this wave 4 low, something like that. And once I am, 10, 15% up, I'm probably going to be thinking about taking profits because why do I want my B to turn into a C and lose all my money, right? So it would entirely depend on my time frame. That's my answer.
Got it, got it. So if it's the latter, where do you think, is it like 52, 55? Where
I
should you
don't
think?
know.
Okay,
Again,
not a,
Prasad, I don't know. And I know of no way where it's possible to know. And again, if you can find out, brilliant. Because if you can learn to trade ABC waves, brilliant. Most people can't. Most people get, left, right, and center crossed up by them. But I honestly have no clue. And I don't know of a method to reach a view. I don't know.
got it, got it. Okay.
If you can find a rule, brilliant. The way these charts are all drawn, it's not rocket science. It's that, a wave 2 is usually a 61.8 to an 88.6 correction. A wave 3, usually somewhere between a 1 and a 1.618 or a 2.618 extension of the wave 1, place of the wave 2 low. A wave 4 doesn't normally plunge below the wave 1 high, and a wave 5 usually terminates between the 61.8 and the 78.6 extension of wave 1 to 3 combined, place of the wave 4 low. Right? These are rules based. And so charts can be wrong, and you see me tweaking them all the time. Of course they can be wrong, but there are sort of, if not rules, then there are common patterns to them. B waves, I hate them. I can't find a common pattern. I can find a common pattern for C waves, which is your default assumption is that C equals A unless proven otherwise. C can sometimes equal 2A, but often C equals A. So if I've seen a B wave and then we're in the C wave down and it starts to find support at around the share price drop in the C leg that I've seen in the A leg, I think, okay, it's probably going to bottom out there. B wave, no clue. I have no idea. And if you can find a rule, brilliant. Tell the rest of us, because I have no idea.
Cool.
And the worst part of them is sometimes they go over that trade point 0. And that's a nightmare, because then you think, oh, well, then, somewhere in the middle of here, that was the B wave, and we've had the C, and now it's only up. Off we go. I'll buy. Bang. C wave wipes you out. So I don't know. I hate them.
Okay. All right. Sounds good. Thanks.
Welcome. Good luck. All right. Well, we're done for the day. Thank you, folks, as always, for attending. Any questions that you have that didn't come up during the session, post them in any way you can find to reach us. You can use chat in Seeking Alpha. You can use the contact form on our website, if you like, at SestrianCapitalResearch.com. You can post questions on the YouTube recording, anything you like. Thanks again, and speak to you all soon.